What's going on, guys? Hope you all are doing well. Welcome back to another video. So in this video, we're going to go a little bit more into detail with my fuel trading model, the model that I've been using for the past year or so, day trading. All right. So this morning I traded because of the high impact news for New York session. All right, I traded during London session. All right, so we have two trades for you guys that we're going to go over. One is going to be on Euro USD. The other one's going to be on GBP USD. And then in a separate video, I'll show you guys the USD JPY buy positions that I took after news released this morning. So as you guys know, when it comes to the foreign exchange market, all right, if I'm day trading, I'm going to be day trading on the M1 time frame. Now I used to have two different time frames that I would use. I would use a higher time frame to give me a bias and a point of interest, and then I would use the lower time frame in order to take the entry that formed at the point of interest. I am no longer trading like that. Okay, that is still a successful strategy. So if you guys go back to, some of the older content, okay, that have thousands of views on the videos and things like that, those videos, okay, if you watch them all, it will give you a strategy that you can use within the foreign exchange market, but it's going to be more so steered towards intraday to swing trading. Okay, this is actual day trading, in and out of positions within the same session, not looking to be in these positions a long time. You guys may hear background noise or whatever. My team is moving around and things like that. We're about to go live on TikTok actually, so you guys may hear my team moving around and moving equipment and stuff. I'm gonna do this in one take, so I'm not gonna do any edits or anything like that. It's gonna be raw. We're gonna upload it, and that's it. So if you enjoyed this type of content, feel free to subscribe to the YouTube channel. I am a profitable trader, and I'm just trying to teach as many people as possible how to become profitable as well, because it doesn't have to take you long. All right, but when you do start, the task is extremely daunting, and then you end up developing habits that steer you away from becoming profitable. So this channel is going to assist you with getting back on track and just giving you a profitable way of looking at the market. So starting with this morning, okay, we had a nice push to the upside, all right, for London Open. Okay, we had a small sweep of liquidity here, okay, and then we see that price takes out, okay, this last bearish candle here, okay, that formed right before price took out the swing high of the same bearish candle. Okay, that is important, okay, because we create selling pressure, okay, then sellers are swept, so anyone selling here, okay, is taken out of the market. So we just swept liquidity, and then we push to the downside and complete the entire pattern. All right, this is in essence accumulation here, accumulating orders, manipulation with this push to the upside, and distribution. Okay, that is all I trade: accumulation, manipulation, distribution. That is the basis of and the foundation of my model. Okay, and I can't necessarily say it's my model. I'm sure other people trade this model. If you have back tested enough, okay, you start to see patterns, and you start to see the same things take place over and over and over again. And that's just where we're at with things. So once price breaks through, okay, after this manipulation, once we distribute to the downside, all right, you can see how there is an imbalance here, okay, where we have pure sellers. That is a problem, okay? We want to see the market remain balanced, all right? So anytime you have an inefficiency or an imbalance in price, that is a red flag, and that starts to create an area where you could possibly take a position from if other confluences are aligned. All right, so we can see that this is where we decided to take our sell position this morning, 2:31 a.m. All right, I don't necessarily trade right out the gate okay, when it comes to London session, because we did have a possible opportunity here on the lower time frame. Okay, it would have been lower than the M1, but I do see it. And I did see it this morning. However, I don't like trading below the M1. So just in case we have, people who trade this strategy, or people who have already joined in on the classes and stuff like that of me breaking down this strategy. All right, yes, there was a buy position here. All right, and yes, it did produce, but it was on maybe the 15-second time frame, maybe the 30-second time frame, but it doesn't fully form how I would like on the M1. All right, I just want to throw that out there. So we can see that price tags us in here, okay, and we start to distribute lower. Now let's talk about my target, okay? So my target for this trade, okay, was based on the M5 time frame. Okay, just measuring this simple manipulation here, this nice push to the upside, okay, right before price takes it out. Now, the target for the trade, okay, if we're looking at the M5, we can see that because price does not necessarily give us a candlestick body closure below this swing low here, okay, I wouldn't necessarily be looking to take a sell position here. All right. However, okay, if you did, all right, it still would have been successful. It would have been in your favor. All right. You would have been looking to run into 2.5, so maybe this would have missed your target by just a little bit. All right. But that just comes with the territory. All right. That's why I like trading the M1. I like the frequency, and I like how the targets are anywhere from 12 to 20 pips in that range. But let's get back on track. Now you'll see with USD JPY, when I upload that video, you guys will see how USD JPY, the target was more like 30 pips or something like that. And I'm pretty sure by now it's hit target. I actually haven't checked on it. Now I'm tempted to, but this video is not about USD JPY. So we'll look at it in the next video. So it hit target, all right, 2 standard deviations. Now, the reason why I chose 2 standard deviations, it wasn't based on my target rules necessarily, okay, based on the M5, but anytime I am targeting a higher time frame target, usually I'm going to go for 2 or 2.5 standard deviations. But I'm a conservative trader, so if I'm looking at 2 standard deviations and it provides me with 5.8% return on investment, I'm going to go with 2 standard deviations. All right, so that's why this was our target this morning. And then we just rounded up just a bit. I think it was like 14.2 pips, 14.3 pips. Yeah, and then we just rounded up to 14.5. Just like we do with the stop losses, we always round up to a half or a whole number. So that's pretty much what happened this morning on Euro USD. So that was a 5.8% return, very straightforward. I mean, we're looking very, very healthy on the month so far. I think we've only had 2 losses this month so far, so that's not bad. Now let's go ahead and look at GBP USD. So GBP USD, we had a simple, straightforward trade this morning. It did not correlate at all with Euro USD. I was actually expecting a sell position here. Now, we talked about this a little bit within the Discord community. If you're not a part of the free Discord community, head over to Mac Trading Academy, first link in the description. Scroll down just a little bit, all right, and join in on the chart breakdown Discord community. All right, I basically send in all my positions within the community. If you guys have any questions, you can ask. Feel free to answer. If you want to send in your analysis and you want my opinion on it, all right, I definitely have you covered on that as well. Shout out to, we actually had someone contact me this morning regarding, yeah, here we go. All right, so we had someone contact me this morning regarding Euro USD. They've been applying the fuel trading strategy, all right, to Euro USD, which I definitely would recommend. So at 8:14 a.m. this morning, all right, shout out to Devo704. He caught these 2 buy positions, all right, and I was able to give him some feedback and things like that as well. So join in on the Discord. All right, we would love to have you a part, and I'll catch you guys there. So back to GBP USD. So like I was saying, it did not correlate at all with Euro USD this morning. All right, I was looking for sell positions all within this area, but as we can see, the reason why I did not take a sell is simply because we did not break external liquidity the entire time. We were just simply internal, right? Creating internal structure. You can trade internal structure, but if it's internal structure on the M1 time frame, okay, then you're going to want to go to something like the the 15-second time frame to, catch these positions, because I'm sure we would have had a trading model here, especially looking as, we had this nice push to the upside here, then price takes out this structural low here. Okay, so I'm pretty sure you would have had some type of entry within this area, because on the lower time frame, this would have looked like, on the lower time frame, this entire region here, all right, would have looked like this here. We've had a nice push to the upside, then we had a push to the downside, push to the upside. All right, a little bit of consolidation here, creating liquidity, break, price traded back up, and then we sold off, right? So your entry would have been somewhere around this area here, given as though, like I said before, right? This would have been accumulation, manipulation with that nice push to the upside. All right, we pushed to the downside, we created more liquidity, all right, and then we distributed to the downside. All right, that's exactly what this pattern is right here, right? I mean, we could even start here, accumulation, manipulation with this entire region, and then distribution, right? And you would have been targeting this low, or you would have just measured out either the manipulated range, here, all right, from this point to this point, or if you're going based on the M1 time frame and you want to use the M1 as your target time frame, then you would just, here, let's delete some of this. All right, then you could have measured from here to here, all right, and that would have given you, some type of target. And I bet you if we do that, I guarantee we have some type of confluence here and some type of confluence here. So I'm just curious. So let's just measure that out. There you go. So you would have been looking to measure this range here if you were using the M1 as your target. Just like we did on Euro USD this morning, we took our entry on the M1, but we used our M5 for our target. All right, so that's just another example. But because we did not on the M1 time frame push to the upside and manipulate above this high here, all right, I did not take the sell position for GBP USD. All right, I would have liked to see it correlate a little bit more with Euro USD, but that did give us, the fact that we had divergence here did give us, confirmation anyways. So after that, all right, price pushes to the downside. We finally break out into external liquidity, all right, which gave us a beautiful opportunity to take a buy position. All right, sell side liquidity here. Now, I don't really care about all too much about lower time frame liquidity, but it is very, very useful. All right, and that is broken down within the strategy guide as well. So if you don't want to, join the Discord, you just want to skip the line, I guess you could say. The index trading strategy guide, all right, this has the fuel model in it. It is for the index market specifically, all right, but you can use the information on the Forex, within the Forex markets, just like I'm doing, all right, within the videos, and that makes it very, very simple for you. And it's literally a step-by-step guide. Like, look for this, look for that, and I give you all the information on why. So, because I know we have some learners out there who want to know the reasoning behind things, and I'm one of those types of people. So we had our first opportunity here, okay, but I didn't necessarily like this opportunity for the buy. Now we can see it would have played out. Our stop loss would have been below this low here, okay. So we can see it would have played out, especially with our stop loss rules. We would have taken our entry somewhere around this area if you were being aggressive, okay. And then we can see that this is 2 pips here, so we would have rounded up to 2.5 because we don't really risk under 2 pips, rarely. Usually I like to round up to 2.5. So we would have been good, to stay in this trade. However, I don't like taking aggressive fuel entry models, okay? Personally, all right? It's a little aggressive because we don't see a full candlestick body closure above this swing high here, above this M1 swing high, all right? Because of that, because it's just a wick closure, all right, I'm not a fan of this move. Now, if we were on the 15-second time frame or the 30-second time frame, maybe we would have a full candlestick body closure above these highs here, all right? But that's not what we see on the M1, so there was no trade for me personally, but as you guys can see, I was prepared for it, sent it out to the analysis community and everything. Then we have a nice push to the upside, price pushes back to the downside. Okay, we actually trade below this low here, all right? And then we trade back above what was responsible for trading below this low. So this bullish candle here, okay, that little bit of accumulation before this manipulation and then distribution, that is what we are looking for price to trade from and then through. All right, so that's exactly what happens here. All right, our entry was on this candle, on this bearish candle here. All right, had a little bit of drawdown, barely anything. We risked about 4.5 pips on this trade. Then we were looking for 3 standard deviations for a total of 2.07% return. So not bad at all. All right, so a very profitable morning. All right, if we add up everything, that's going to be 5.8% on Euro USD plus 2.07% on GBP USD, totaling about 7.87% return on investment, day trading using the fuel trading model. All right, now within this video we got into a little bit more detail than we have been within the other videos, and as time continues I will get into more and more detail, but I want to introduce this concept a little slow, okay, to see kind of where the YouTube channel is at as it relates to understanding of the markets, etc., etc. So if you have any questions at all, feel free to drop them in the comments. If you enjoyed this video, feel free to leave a like and subscribe to the YouTube channel, and I will see you guys in the next one. Peace out.